Well, hello, folks. Welcome to another episode of Miyagi Mornings. As Charlie Daniels, the canine, joins us. He's hanging out behind me here. He's getting ready to lay down on his bed for those watching the video version of this. So what are we going to talk about today? This is a subject that I think we'll be talking more and more about going into the future. We're going to talk about how Bitcoin and other cryptocurrencies eventually, anyway, will play into retirement accounts. And this started from a question on MeWe. A individual has like $8,000 sitting in a 401k at a job that he has left. There's now multiple options. One would be to roll it into a like-kind IRA. So if it's a conventional, it would go into a conventional. If it's a Roth, it should go into a Roth. Anybody that knows me knows that I would tell you, if you have a choice when you set up a retirement account and you don't do a Roth, then you're either ill-informed or the person informing you and telling you to do it was ill-informed. Don't ever do that. Roth is, yes, you don't get to take the deduction this year, but then you never pay tax on the money ever. And I like never pay tax money. That's the only reason you'll get me to put my money into one of these accounts. Since both options exist now, I would rather pay tax on the income rather than tax on the income inside the investment over time because, well, math. So whatever version you have, you could roll into that. He's thought about doing something else. He's thought, you know what, the way Bitcoin's performing and the long-term nature of crypto assets, why don't I liquidate this account and pay the pay the penalties on it and just buy Bitcoin? I don't like that. Now, I'm going to temper this with, if what you have is a Roth 401k, and when you fill out the paperwork, you do it accurately, you will only pay interest and penalties on the gain. Okay? And that might make this doable. You'll have to run the math for yourself. But I still don't like it because you're giving them your money. Because you took the money prior to the time you're supposed to take it. So I don't like doing that. But maybe, that's an individual decision. What I want to talk more about is, does Bitcoin and other crypto assets belong in your tax-deferred or tax-exempt retirement strategy? And the answer to me is yes and no. We just have to be clear about what we're doing. I'm also going to tell you that I tend not to talk about things that I don't absolutely know about. And I am going into a world where some of this is what I think versus what I know. And I'm going to try to be clear when I'm telling you what I know versus what I think. But just assume if I didn't specifically say so, it's my opinion. All right. So this is an opinion, but it is based on fact. My view is that when it comes to forms of wealth that are largely anonymous and can be totally within your control, in many instances you do not want to put them into something like an IRA or a SEP or anything else like that. And the reason is you've taken one of the most private assets and you've made it as public as possible. And unless you can come up with clear tax advantages to doing so, you probably shouldn't. An example would be, I want to do a physical metal IRA because the guy on TV said so. Okay. So what you want to do is take wealth that you could hold completely anonymously, and until you sell it, pay no taxes on it whatsoever. And you could physically trade it or physically hand it down with no paperwork. You want to take wealth that is completely and totally anonymous, and you want to make it public to the government that you have it. That doesn't make sense. That doesn't make sense to me. However, when would it make sense? Because this is going to have a lot to do with how we look at, let's say, Bitcoin inside an IRA, which is going to become more and more possible. What if you already had the money in the IRA, and that was the money you had to buy silver with, and you either used that money or you didn't get to buy silver? Personally, within an IRA, I want my assets to take advantage of the tax-free or tax-deferred status to remain as liquid as possible. So if you told me that, I would be like, well, then what you want to do is inside that IRA, you want to buy an ETF in silver. But if you don't hold it, it's not yours. Okay, this has worked for 25 years. It's going to keep working. Yes, I know they manipulate the silver and gold market. That's why you want to buy the physical metal in the first place. But what that would allow you to do is take that money, do nothing with it, pay no penalties on it, buy your silver, and when silver spikes and you want to take some of the profits, sell it with no tax consequences. Because until you sell a commodity, you don't owe tax. I've tried to explain this about Bitcoin to people that freak out about KYC. Let's say you went on Coinbase today, like one of the most public exchanges there is. You did your KYC, you wired $100,000 into your account, and you bought $100,000 worth of Bitcoin. You owe no taxes. You transfer that money to your own non-custodial wallet. You still owe no taxes. You haven't sold it. Coinbase sends your customer records to the IRS along with a picture of you petting a dog wearing a Bitcoin sweater while you're wearing a Bitcoin t-shirt, holding up a thing that said Bitcoin 10x, I'm a Bitcoin millionaire. And do you know how much you owe in taxes? None. You only owe money on crypto assets when you exchange them at a profit, and you can take a loss if you exchange them at a loss. If Bill gets $10 in Bitcoin today and he spends his $20 in Bitcoin tomorrow, say it doubles overnight, Bill owns tax on $10. Possibly he owes it on the original $10 if he received it, publicly as a form of compensation, as a profit, right? That's how it works. And it doesn't matter if you spend it directly. It doesn't matter if you convert it into another crypto asset. And it doesn't matter if you turn it into dollars. The IRS treats all of those things the same. You have executed a trade in one form or another, and you've realized a gain or a loss. However, if your plan is, I'm going to put it in my retirement account, and I'm going to hold it till 2030, 2035, something like that, and I'm not going to be trading it, there would be no tax consequences anyway. This mitigates one of the reasons to move something like a crypto asset into an IRA when it becomes fully and wholly possible. Here's where I'm going to go into a world where I'm telling you what I think versus what I know. There are self-directed IRAs right now where you can set them up yourself and hold Bitcoin inside of them. I don't know a lot about them. I'm not going to pretend that I do. But what I would say is if I were going to set one up, I would not do it without help. And I would deeply research the people helping me to make sure every I is dotted, every T is crossed, and I don't get a bill by the government that says this does not qualify. All right, so I'm going to leave that on the shelf for now. Because here's where we are going. This is not fact, as in it hasn't happened yet, but I'm going to tell you where we are going. We are going into a place, by the end of the year, there will be multiple Bitcoin ETFs. These are going to be funds that directly hold Bitcoin as a custodian for their clientele. They'll take some money in management fees for doing that. That's what you do when you go into publicly traded assets. You pay a fee to some fund manager or something like that. And what it's going to do is it's going to open the market for all of that IRA, 401k, etc. money. Yeah? And I think that would make sense. I think it would make a lot of sense for the average person to say, you know what, I've worked really hard. I've put a lot of money away. I have, mid cap, small cap. They tell me I'm diversified. But literally, I'm holding nothing but stocks in companies denominated in dollars. That does not make diversification. So I'm going to throw 10% of my holdings, or more or less, up to you, into a Bitcoin ETF and effectively hold Bitcoin in my retirement account and have this in a situation where it's not taxed now or it's not taxed ever, depending on the form. That makes perfect sense. And whether you do it or not, shitloads of people are going to do it, and it's going to drive the shit out of the price of Bitcoin and Ethereum, because that's going to get its own ETFs, up. There may be some other crypto assets, but those are going to be the two that get approved out of the gate. Bitcoin this year, Ethereum maybe this year. That is going to happen. It is going to happen. It is going to happen. The Fed is dragging their feet on this. They know that eventually they're going to have to concede and do it, because if you look at the ETF world, when they say, we're protecting people, it's volatile, every freaking commodity on the planet except cryptocurrency has an ETF approved by the United States government. Like shit that's like soybeans have ETFs, right? If you can come up with something that people trade on a market, there's an ETF for it except Bitcoin. So they also just approved the Coinbase IPO. So that's going to happen. When that does, that money's going to flood there. So when would I use a retirement account to purchase Bitcoin or crypto assets or whatever? One would be if I have let's say that I'm the guy that says, you know what, I mostly just buy and hold Bitcoin long term. That's what I do. But I want to take like $5,000, $10,000, something like that, and I want to trade it. If I can get that into a Roth IRA where I pay no tax, where I have freedom to trade and not pay taxes on the gains, and I can build the long-term wealth with trading because I'm a good trader, yeah. If I'm a big-time trader, I want to move as much of it into that Roth IRA or whatever as I can, because now I can trade with impunity without paying any taxes. Well, you don't have to pay tax on Bitcoin. Yes, you do. And there's a point at which if you're doing things like this, you either get into a world of complete black market world for yourself and you're at risk, or you come above board with at least some of the things that you're doing, right? Because it is easier to legally avoid paying taxation than it is to do it illegally. The 95% of your tax code tells you how not to pay the taxes. The other 5% tells you have to pay. Because the people that wrote the code for you don't want to pay taxes because they're not lawmakers, they're corporations. So if you learn to focus on the 95%, you can legally not pay the shit out of taxes, right? You might still pay tax on some, but then all your money is available in the public to do what you will with, because we're going to get into a place in the future where you're going to be able to make money in retirement by holding Bitcoin and not pay any taxes on it without any kind of retirement account. I'm not going to get into that today. I'm just going to tell you that there's a strategy for doing that that's becoming more and more doable over time, because you'll never sell the underlying asset. Therefore, the gain is never realized. Therefore, there is no tax due. And this is the way you have to start thinking if you want to win in a world where the people set the rules for themselves to do that, instead of thinking like most people do, which is like a beggar. Sir, may I please defer some of my taxes on some of my money? Right? How about, can I please defer taxes on 95% of my money? Can I please not pay taxes on 80% of my money? Oh, please? I don't have to say please, right? You wrote it in the code. I'm going to follow that. So I do see this as a trading strategy. And I do see it as a long-term strategy for any asset that you plan to liquidate for retirement income. In other words, your plan to actually make money from it is to sell it, convert it, and pay for stuff with it. Because that's when you pay tax on a crypto asset. The reality is, Bitcoin is an incredible way to defer taxes almost infinitely for the holder. So if your plan is to hold Bitcoin, I'm only putting it in an IRA if I'm short on my contributions this year, and why not? So I know this is a little all over the map for you guys, but this is an emerging space where we have to make decisions with the information we have now and assumptions about what's going to happen next. However, regardless of whether or not you put this in an IRA or not, people are going to buy the freaking millions. Buy the freaking millions. When there is a true, like, it's not going to be like, a grayscale Bitcoin trust. Like, gives you partial exposure to Bitcoin. But like when I look at the Grayscale Trust, for instance, this is the biggest, best known way to get exposure to Bitcoin through a public asset now, which means it could be in your Roth IRA. They correlate about 2/3 to the performance of Bitcoin, meaning, if Bitcoin went up 300% in a time frame, then the Grayscale Trust went up about 200%. That's a 33% premium. Jack's not into paying 33% premiums. So if you had 1/3 the performance, you might be at net zero from the asset that should be up 30% roughly, right? Like, I'm not doing that either. I'm not giving up that much performance. So I'm not putting my money in Grayscale Trust, right? However, lots of millionaires and billionaires are, because they have huge amounts of money that is not in their name. See, billionaires don't hold their money in their name. They hold it in different investment funds and different trusts and different things like that. And all of those things have a charter, and the charter says, these are the things you can do with the money, and these are the things you can't do with the money. And the people controlling those trusts or other sources of funding can go rewrite the charter, but the entire process to get that done is going to take 6 months to 24 months for the average agency or group to do it. It would actually be easier to roll out a new thing. But you have all this money sitting in this old thing. So what do? You invest in places you can. You can buy publicly traded stocks. So if you want exposure to Bitcoin with that kind of funding, what do? They go in and they buy, Coinbase. They go in and they buy Tesla. They go in and they buy MicroStrategy. That's another thing you can do short term. Back to the original question. If I had $8,000 sitting in a 401k right now, and I wanted Bitcoin in my life, would I liquidate, pay the penalties, and buy Bitcoin? No. However, I'm in a totally different place in life than, every other person on the planet. We're all in our own place. We all live in our own world to a degree. I have a lot of Bitcoin. I have a lot of other crypto assets. And the people, you need silver. I had silver before you know what it was, okay? Yeah, I'm a long-term silver hodler as well, right? So I have well-diversified investments within the standard stock market, right? I have a good income. So I don't have to make that decision in reality. I can just say that's $8,000, leave it there. Eventually, they're going to give me a way to take some of my deferred money or my sheltered money and put it into Bitcoin directly. And when they do, then we'll figure out how much of it goes there. If you have none, you don't have any money to do it with, I understand the feeling, but I also would say this. Like, if that $8,000 is all you have, throwing it into a speculative asset like Bitcoin is probably not the best thing to do, especially if you're going to give up a third of it. And now you're talking like $6,000 that you get to keep because they're going to penalize you for taking your own money out of a vehicle that you probably didn't fully understand when you put your money in there. Again, if this is a Roth and it hasn't performed all that well and you haven't had it for that long, it may be the case that you can free that money in any way that you want with a very small penalty, and that would be a little bit different. But I think that everybody needs to be thinking about this dynamic right now in the crypto space. Because again, what you do inside your retirement style accounts, right, is irrelevant to what the market will do. And when this opens, and let me tell you why I'm so confident. There's multiple ETFs available to Canadian citizens right now. So is the United States going to sit by and not approve these funds while the Canadian government does? And then I want you to think about the difference in population between Canada and the United States. And I want you to think about the sophistication and the understanding of crypto investing in the United States versus Canada. And I want you to think about what the hell happens when these hundreds of billions, or dare I say trillions of dollars, all get a look at, hey, we can put a little bit over there. What you've seen happen in the crypto space so far, and this idea that, well, they're going to ban it. If you're saying that, you've been saying that for 12 years now, and it's time for you to wake up to reality. No, they're not. And now that we have this type of thing, now that we have publicly traded companies holding it on their balance sheet, now that we have publicly traded companies whose only business is cryptocurrency, you know those guys you're always bitching about, lobbyists? Well, for once, if you'd front run the damn thing and quit being a coward with your money, right? Because it amazes me, right? The person who has been putting 10% in their 401k for 15 years doesn't even really know what they're holding, glances at their quarterly statement maybe, and every week their money just goes in there. Oh, I think it's doing good. They don't even worry about it. And in reality, in most instances, they probably shouldn't. You know, I think you should reevaluate things once in a while and maybe move into another sector or whatever. But in general, that process works, right? They've rigged the game to make sure that it mostly works. But that same person will sit and hem and haw about buying $300 worth of cryptocurrency. How long have you been doing that? I don't know, man. It's up to y'all. But this is where we're going with this. And I just wanted to kind of get that out today. That's what you have to think about. You're taking a completely, an asset you have complete control over, and you're moving it into a place where there's eyeballs on it, probably more eyeballs than any other place it could be. There's no reason to do it, but you need to know the reasons that you're doing it. Take care, guys. And if anybody can help me out with an expert, like an actual expert, not someone that, well, he did it. I mean, someone that actually knows what the hell they're doing with how you hold crypto and self-directed IRAs, I'd love to have them fill out my guest form at thesurvivalpodcast.com. Take care, guys.